Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, and let's figure out what has happened today and what we can expect, of course, as per usual, moving forward. But with all that being said and done, if you enjoy this video, don't forget to hit that like button as it does help a lot. This is not financial advice and I'm not a financial advisor. And of course, my membership section on YouTube is live. The link is down below. For $3 a month, you get access to all my intraday thoughts, posts, updates, etc. Pretty much as Tesla. I went to see the Cybertruck in person, pretty sweet car. Yeah, pretty much. You get access to all that as I post it and yeah, throughout the trading day. So if you're interested, the link is down below in the description for $3 a month. But with all that being said and done, let's jump into it. Tesla closing the day in the green, pretty rare to say, up 1.25%, closing at about $240.50 per share, which unfortunately compared to the market is a bit of an underperformance, with QQQ being up a nice whopping 2% on the day. Pretty substantial performance by the market. And unfortunately, Tesla only taking a very small portion of that rally with itself, so could be better. But nonetheless, let's talk about what we actually see over here. So I mean, as I'm sure you can see on this chart right here, potential in a bearish head and shoulders pattern setting up here. We'll talk about this first, I guess, while we're here, so then I can close this. But we do have a potential bearish head and shoulders pattern setting up here on the 4-hour roughly time frame, give or take, right? Doesn't really matter. But the point is, you can see we have, of course, the left shoulder here, the head, and of course the right shoulder potentially forming right here, as you see right here, right now. So it's definitely something to kind of pay attention to, I guess, right? Because if this actually plays out, then this can potentially take us back down to 215, 210, etc. The neckline of this head and shoulders pattern is going to be somewhere around, honestly, to me, really like 230, like very, very low 230s is the neckline in my eyes, at least. But on the right side, if the bulls happen to break through, in my opinion, at like 250, ideally 245 already is pretty good, but ideally 250, this also will, in my opinion, nullify this potential bearish pattern, right? Again, never know. Maybe this right shoulder won't even form. Maybe we'll do something else entirely, right? You never really know with these kind of things. Just something to keep in mind and just, keep in the back burner for now. Now, with that being said, let's jump over to this little picture over here super duper quickly as I talk about this. So this is just an example of what we're kind of seeing right now, right? This is, I believe, a weekly time frame on both time frames over here. But essentially what you see is on the left, of course, 2021, and then the right, of course, is literally right now. Pretty similar idea, right? Pretty similar structure. We had a sideways here, massive rally, ended up essentially creating a descending wedge or a bull flag, whichever we want to call it, right? Pretty much the same concept over here. Broke out, we broke out, then we had some red days to follow as we essentially hugged the retest of this breakout of this descending wedge or bullish flag, whatever you want to call it, a bull wedge, whatever. And then we're pretty much doing the exact same thing here, right? We're hugging it, so far bouncing, which is great. And then we had a massive rally and then potentially setting up for another massive rally. Now, again, keep in mind, obviously, I'm not necessarily saying that we'll have a rally this, substantial. Maybe it'll be more, maybe it'll be less. No one knows. But the point is the fact that history often, or in the market, things often rhyme, right? History often rhymes. It never is exactly replicated, but it often does rhyme. And that's kind of what we're seeing potentially being developed and set up right here in front of our eyes. So just something to note as well for Tesla. So with that being said, though, looking at the actual chart over here now, right, we have the daily chart. Let's talk about that first. So first and foremost, right, we have, of course, like I said many times, we're still, in my opinion, holding the VWAP, which is great, from the lows over here back when we were at just under $200 per share, right? We are, of course, bouncing off the 50-day moving average as well, which is great to see. And probably the most important thing in my eyes is the fact that we are, what is going on? Let me remove this for now. We are we are literally bouncing off of this, I mean, in my eyes, a bull flag retest, where we're bouncing right off of that right here, right now, and it's looking pretty good. We held it for several days in a row, 3 days in a row, and now we're looking for a bounce, and we so far are getting that, and we did recapture the 240s. Obviously, we're just barely in the 240s, so it's not like super convincing recapture of the 240s, but so far, again, the main thing I'm looking at is that we're getting a nice bounce off of this retest, which is what I want to see. So far, so good. Obviously, there's still things to be cautious of, but that's the main thing I'm looking at right now. And so far, we're holding it. Now, like I said, we are bouncing off the VWAP. We are bouncing off the 50-day moving average, but obviously, we do have some resistance above us. For instance, we have this 100-day moving average right here. You can see right above us. We also have the 21 EMA slightly further above us as well, which I actually think we'll get to probably even potentially tomorrow or the day after. I actually think that is a possibility, but I do think that might serve us, some resistance, right? Because if we go over to, what was it, the 65-minute chart, I believe. Let me go ahead and bring this out, right? You can see there's a very little volume here. If I bring out the 65-minute chart, right, as we potentially, you know, cross back over really above 242. If we break above 242, the volume starts to get really thin, all the way up to about, you know, 246-ish, give or take, which is roughly where that 21 EMA is sitting. And that's where I expect us to potentially run to, get some resistance, maybe even get to barely a gap fill over here at 248 if we're lucky. Got our hair in my mouth. Go ahead and, kind of nasty. I don't know where that came from, but excuse me. Nonetheless, yeah, that wouldn't surprise me if we get there and then overall find a potential rejection, right? So that's kind of the main thing I'm looking at. Now, the way I look at it is also like this, right? Let's say you're bearish about this bounce. Let's say this bounce right overall that we're seeing right now, you're not very bullish about it. You're thinking it's a trap. It's an overall trap and it's ultimately just a dead cat bounce. That is still a possibility. Now, even if it is a dead cat bounce, which again is a possibility, it's still pretty likely that we at least see roughly 246.5-ish, give or take, right? Again, roughly where the 21 EMA is, because that's the 0.382 Fibonacci level, right? That is where this potential bounce, assuming it's a quote unquote dead cat bounce or like a bearish bounce, can potentially lead us. Like, I'd be surprised if we don't at the very least get to about that rough 246-ish level, which is again that 0.382 level on the Fibonacci, right? That's the main level I'll be looking at least to touch sometime, maybe this week, maybe tomorrow, right? So keep that in mind, right? That is something to note, right? Because again, even if it's a bearish bounce, you would expect it to at least get there. So that's one thing to note as well. Now, obviously intraday, we were trading in this potential descending wedge that I did tell my members about. I was posting about this pretty much all morning. And then we, of course, did finally break out. And that's what pretty much gave us that move up towards into that 240s level, which is also important to know. Now, back to the daily, one thing that's interesting is, so we have the squeeze indicator, right? Which is at the moment, not really sure which way it wants to go. It was bearish, then it was sideways, or bullish, then sideways. Now it's a little bit bearish. But earlier today, when we were in the red, which we just started the day off in the red, of course, this red circle over here indicating that, you know, the squeeze is still being built, or I guess, you know, being contained, if you will, it did actually turn green, a green circle. All that green circle means is the fact that the squeeze has now officially picked a direction with this little bearish bar as well, which could have seemed bad. But of course, this rally pretty much that we had for the rest of the day ended up taking the circle from a green back to a red circle, indicating that, you know what, never mind, we haven't actually picked a direction yet. I just thought that was kind of funny, but that is essentially what happened throughout the day. The weekly is still showing red circles as well, not really sure where it wants to go. The MACD is also pretty much flat, not really sure where it wants to go as well. And ultimately, the way I look at it is pretty simple, right? The overall major levels that I'm looking at that you really want to pay attention to are going to be as follows, and it looks the best in my opinion on the weekly chart. So to the downside, right? I'm pretty much looking at 230. That's like the level that, you know, Tesla can potentially, maybe even next week, you can see right here, go down to and still be good. Why? Well, because on the daily, that's where the 200-day moving average is. That's where this potential green line right over here, rough support area is that we've bounced off several times, and potentially, you know, we're very close to it again, but not exactly at it. Could potentially bounce off of it again. We're still technically retesting the bull flag. If it happens, let's say next week, and we go to 230 next week, also a possibility. Well, we're still technically, in my opinion, in a good spot, right? It's looking a little bit on thin ice again, you know, once again, but, you know, we're still in my opinion, on a pretty good spot. Now, the upside target is, of course, going to be the first one is naturally, well, it's going to be somewhere around the 250s, right? Break above 250, that's a damn good start. But ultimately, what I'd want to see is pretty much a break right above about that low to mid 260s, about 265, slightly lower, maybe depending on when it happens. But that'll be the upside target I'd want to see. So if any of these levels, the downside target 230 or the upside target, first one is roughly 250 followed by 265-ish or maybe lower. Those are the levels you want to break for a move in that respective direction to continue, right? So that's the way I'll be looking at it as an overall picture. Until then, we're just going to be zigzagging here until a direction is picked, whether it's CPI this Thursday, whether it's earnings next week. One of those, I'm sure, will hopefully bring us out, and I'll be surprised if it's CPI. I think it'll be earnings. I think we'll just go sideways overall until earnings happens, right? That's kind of what I'm personally expecting right now. And that's kind of what I will be anticipating personally. So that's the main thing I'm looking at. Options flow right now, a lot of things went away. So it's looking a little bit okay right now, a little bit more bearish here, I guess. But overall, nothing major in options as of right now. So nothing to really note over there. But all in all, that's the main stuff I'm looking at, ladies and gentlemen. So there's not a whole lot more to talk about. In my opinion, we're just going to go sideways. I think there's still a very good possibility we'll come up to somewhere around 245, 246. But I think we'll most likely find some rejection there, roughly around the 21 EMA as well. But another thing to note is the fact that, you know, if I bring out the stochastic over here, right, on the daily, for instance, you can see the stochastic is pretty low, right? Every time it gets to roughly these levels, if not maybe a little bit lower, it pretty much every single time has found a bounce, right? It's found a way to go back up, right? It doesn't have to happen like literally tomorrow, but you know, it always finds a way to pretty much get a pretty respectable bounce from this general quote unquote oversold area. So just something to note, right? Just something to note. Every time it's been down here, it's found a bounce. Doesn't mean it can't go a little bit lower first, of course, but just something to note for your own information, and you know, do with that as you will. Same thing on the 4-hour over here, right? Pretty much near the bottom as well. Very, very low on the 4-hour, very, you know, quote unquote oversold as well here. Like I said, potentially looking for a bounce. So that's what I'll be looking at right here, right now. But all in all, ladies and gentlemen, that's the main thing I'm looking at. That's the main thing I'm eyeballing. And yeah, if you have any questions, of course, as per usual, let me know down below. But so far, so good. We're getting the bounce where we needed to. We're bouncing off the bull flag retest, and it's not looking too bad. And I think it's potentially, fingers crossed, looking promising for Tesla moving forward. I know a lot of people are bearish, and I said it's on thin ice, but as long as we hold this retest, it's still just a retest. As scary as it might seem, it's still technically just nothing more than a retest. But all in all, thanks for watching. Hope you enjoyed the video. And as usual, I'll see you tomorrow. Peace.